Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come.
Good morning, everybody, and welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope you guys all had an absolutely amazing trading day yesterday, as we're going to do what we do each and every day here on the DMC. We're going to take a look at breakout trades and reversals from an educational perspective so that you can understand a little bit more about what's happening in the market. Speaking of educational perspective, we have a scheduled webinar, which we're gonna talk a little bit later today about when that's going to be scheduled, but it looks like next week, early next week in the evening. I've gotten a lot of requests. I've been asking people what they would want to see, and the biggest responses I've got were counter trend trading and the use of momentum indicators. So what's kind of great is we can do both of those together. So next week, we're going to do a live webinar on counter trend trading using momentum indicators and how we can use them to help our probability and our odds enhancements. So you stay tuned for the time and date of that one, and I will let you know a little bit more about that one later today or tomorrow. So let's go ahead and dive right in on our futures markets today. So the S&P, we're up 17 points. We are coming up off of these lows down here. I'd love to tell you that I caught these lows and nailed the bottom, and I've ridden this thing back up. That is absolutely not the case. There was really no strong area or turnaround point of demand down here for me to lean on. I mean, even if I go down to the 15-minute chart, I couldn't make a case for this long wick being my demand area. So while I'd love to tell you that I was able to absolutely nail the bottom of the market, that would be frankly just wrong, because I didn't. I actually anticipated prices to fall a bit further into maybe one of our lower demand areas. But now that we are rallying, we do have a supply area up here that could stand for a potential reversal point. Now, that reversal point that we could stand for could be an area of price coming into here, and we would get short as it comes back down out, as it comes down out of this level. So right now, it's still actually a limit entry. We haven't switched it to a confirmation entry. So long as I don't get any basing in front of it, that would still be valid. Now, as for the Nasdaq, the Nasdaq is also rallying up, but the Nasdaq is not as close to that same reversal point. If you notice, both of them are reversals that started around the same time of the day, right around European market open. But notice how the S&P is significantly closer to its reversal point than the Nasdaq. The S&P, we're about 5 points away as of we're doing this recording at about 10 to 6 in the morning on Central Time. The Nasdaq is still significantly further away from that reversal point. And so the Nasdaq could reach this area at roughly the same time the S&P reaches its level. So, keep an eye on this area for the Nasdaq. Crude oil. So in crude, we had a 15-minute level identified. On a 15-minute chart in crude. Price came up, gave us just a smidge touch. You may or may not, if you took this, if you took this whole candlestick as your level, this whole green candlestick as your level, you may have gotten filled. I will tell you I did not. Yesterday was one of those days that was a little bit frustrating because price came super close for me, and I just got nicked by a tick and just missed it. And then price dropped all the way down to this area of demand and then rallied up. Now, came back and hit it again later on yesterday in the evening and got a nice little move away to the opposing fair price value area. And so this level worked really 3 times. First time it would have been a little bit better had I taken the full buffer. Me personally, I did not. Leave me a comment down below if you did take this crude oil trade the first time through, if you caught it and had a wide enough buffer. Once again, I'd love to tell you I did, but I didn't. And that's part of the fun of doing these daily market commentary videos is, I want you to see where I screw up. I want you to see where I miss trades because it doesn't really matter, right? Over time, I will wind up getting those good trades and they will show up for me. Just didn't show up yesterday in that crude oil position because I just barely missed the opportunity. And I'm okay with that. right? Because another one will come along. But now, as we're continuing to rally higher, I'm looking for what's my next area, what's my next entrance. Well, on the hourly chart, I don't have a quality supply anywhere up above me. I've actually got to go out to a 4-hour chart to start to look for some quality supply, and it doesn't come into play until up here. So that definitely tells me I'm better off probably being a buyer at this point than I am being a seller. And I had anticipated a bit of a sell-off in crude oil. I know a couple of our Traders Army members, we were talking about an iron condor in crude. Hopefully that sell-off helped you a little bit in your iron condor position. But I feel like we've got a chance for price to continue to rally a bit higher from where we are. So just be cautious of that in your positions. I think we could be setting up for a potential breakout to the upside here. In gold, I think that we are, we're hovering above this area of demand right here. I'd love to see what happens if we break down below this region here. I think we could be setting up for a bit of a breakdown right above this area here. This is also ultimately my reversal point, but looking at gold in that potential. In our bonds and currency markets, we are seeing the dollar inch up, so our currency markets inch down. The ZN, we had a tweezer top up here, which we talked about this tweezer top, and that tweezer top is holding true with a nice little sell off from here. Gave it a little rally up, and we're continuing to fall. So those of you that took that short, you're loving it, doing well, I hope. In the Aussie, we did not quite make our reversal point. Got the gap up, came close to it again, did not quite get in on that reversal point. If I slide this to a 15-minute chart, I'm going to look at this area right here. Now, this is not obviously a great time of the day for a short entry. Typically, we would want a better time of day, but this is a great structure of the level. So I like the structure of the level enough for me to include it, even though I don't like the time of day that the level was formed and created. Next would be the euro level. Euro level looks very similar to the one I just talked about in the Aussie, but it's not quite there yet. I think that in both of these markets, we can anticipate prices dropping further as we're seeing more strength overall in the dollar. Canadian dollar rallied up hard off of our demand area and is continuing to move higher, but it's still basically range-bound, right? If I go to the 4-hour chart, it's still basically in this range-bound band, and so there's ways to trade this range-bound band by looking to short the next time we come up into here and long down that area down below. Last and certainly not least, Great British Pound, Japanese Yen. The Japanese yen, we did come up into our little supply area. Talked about it yesterday. It came up to it, chopped around, broke above it, and then sold off from it. So now I need to remove that level, as that level did not hold out. And we're seeing price fall off of this little level right in here. This is really where we're seeing price fall from this morning, is this little level right there. But I feel like it's probably moved away already, and we're coming into our demand. Now, this demand is weaker demand because we came close to it and didn't get the order filled. So coming close to it, not getting the order filled, tells me I need to convert to a confirmation style entry on price coming back into this range. Great British Pound, once again, our sell-off in all these currencies kind of still continues as we're seeing the strength in the dollar. I would put the next opportunity to short the pound right up in this area in here. Pretty much all of these are right around the European market open, and it's just not gotten back. If you look at the European market open for the last 4 days, it's created levels that have not yet been retouched. And what's probably going to happen is at one point we'll break through one of these, and that will invalidate most of these here because it's going to change our trend direction. So just keep that in mind as well. So, I kind of felt like this week we would have, not a whole lot of price movement compared to prior, and that's kind of what we're seeing so far. Yes, we had a big down day yesterday, and then we're starting to come back up today, and we'll see if we just kind of stay inside, my gut told me that we would stay inside of last week's range, right? And really, it's really that we would stay inside of this range here on all of these markets. And so we'll see what happens later on today, and of course later on into the week. But just don't let the news drive your decisions, right? Still make your decisions based on what the chart tells you, because when you let the news make your decisions, that's where most traders falter. Follow the trade. Let the trade tell you where to go, and then that's going to make it that much better for you. So if you have any questions, please send us an email, support@tradersarmy.com. Go to tradersarmy.com today. Take a look at seeing if it makes sense to become a member. What's great is that we've got a really good promo going on. You can get your first month for 60% off to see if it makes sense for you to come on board. It's hopefully it'll be something that really helps your trading. The members that are there have really said a lot of great things about it. So I look forward to having you join us there. So I will talk to you soon. Hope you guys have a great day.